Hi, and welcome back to Grow Your Worth. Today we will introduce the three most common investing ideologies and help you decide which strategy is best for you to start making sizable gains in your portfolio. We will also let you know what broad investment analysis strategy our team at Grow Your Worth has adopted with massive success. Perhaps the most common method of screening for potential investments is fundamental analysis. Popularized by the great Warren Buffett, fundamental analysis attempts to measure a security's intrinsic value in comparison to the current market price. The most common form of fundamental analysis is referred to as top-down analysis. Top-down analysis begins with looking at the macroeconomic or global environment, focusing on indicators like GDP growth, inflation, exchange rates, and much more. From there, the search narrows down to regional and industry analysis, keying in on metrics like total sales volume, both foreign and native competition, and price levels. Finally, after attractive industries and regions have been identified, the best firms are uncovered. Attractive firm-specific qualities include strong financial statement performance, a rockstar management team, and competitive advantages, sometimes referred to as economic moat. Companies that rank highly in all of these factors and currently trade below their intrinsic value are attractive buying opportunities. Companies that rank poorly in these factors and trade above their intrinsic value are attractive short selling opportunities. Fundamental analysis is for the average investor who is willing to put in some initial upfront work to identify buying opportunities, but does not require constant daily upkeep unlike other methods, so you can focus your time on generating more income. The second strategy, which is continuously growing in popularity, especially on professional trading floors, is technical analysis. A complete 180 from fundamental analysis, technical analysis is used as a sole strategy under the assumption that all relevant information is reflected in the price of any given security, meaning each stock is trading at fair value. So how does a technical trader make profit? Technical traders make money via short-term swings in the price of a given security. They forecast these swings with large amounts of data analysis and focus on many indicators like price movements and volume. Technical analysis was built off of the Dow theory that suggests that movements in the price of securities are not random, but in fact movements that repeat themselves throughout time in identifiable patterns. Technical analysis can be great for investors who are proficient in mathematics and are able to analyze price movements and identify recurring patterns in order to profit. A drawback of technical analysis is the time commitment involved. For professionals who trade full-time, the time commitment technical analysis requires is no problem. But for those employed in other fields or committed to other entrepreneurial ventures, this strategy may not be the best fit. The final method we will discuss today is quantitative analysis. In comparison to the fundamental and technical approaches, quantitative analysis has similarities to both. It can be used to make long-term investment decisions and makes use of financial statement variables, just like fundamental analysis. Similar to technical analysis, quantitative analysts make use of many formulas, statistical models, and data to come to an investment decision. Essentially, quantitative analysis aims to reveal attractive investment opportunities based on formulas, and those who strictly use it believe that numbers tell the whole story. Similar to fundamental analysis, there is some initial work to be done up front, but once the investment candidates have been selected, there is no need for a major time commitment if the right strategy is in place. You may now be wondering, what strategy have we used collectively to post strong results year after year? On a broad level, the Grow Your Worth investing approach is a blended strategy. We use both fundamental and quantitative analysis to identify attractive long-term opportunities and technical analysis to identify attractive entry and exit points, as well as when to trim our position and when to consider adding to it. Well, that concludes today's video. As always, if you have any questions or would like to see a more in-depth video about each of the three strategies, leave a comment below. If you enjoyed today's content, don't forget to leave a like, subscribe, and hit the notification bell to stay up to date with our videos. Take the first step in growing your worth today.